In this video, I'm going to talk about my first ever buy-to-let property. We're going to talk about the highs, the lows, and believe me, with this one, there were some lows. It could have ended all there. We're going to talk about the real numbers that you can expect, not just the fluffy stuff that you see across social media on YouTube, but the real numbers. So if you want to know what it's like to be a property investor and get the real returns, we're going to go through the yield, we're going to go through every aspect of the property and break it down for you in this video, so keep watching. So like any deal, we've got to start with how I acquired it. With this property, what I did was I seen the property in an area that was right on my doorstep, in fact. So it was a street just up where I live at the moment, which made this a lot easier to understand the prices. Now, understanding the area is a crucial part of investing. Understanding the area, down to the crime ratings, down to the schools, all of those things. You need to understand all of that aspect. So what I was able to do, knowing the area so well, I mean, you're not going to get better than your doorstep because you know exactly what you're getting. You know what the streets are going to be like, you know what the crime's going to be like, you know what it's going to be like to live there exactly, because there was a few things with this one that we needed to address. So first of all, it was on a main road which gets a lot of traffic, so I knew that that was one thing that maybe would have downside to the property. But the other side of it was that it was right near a prime school in the area. So it was a primary school was just opposite this property, so it made it super convenient for whoever's kids were attending that school. That was an area that also the people want to be going to attend to that school. So to us, that's a massive factor for rental demand. It wasn't too far from the M4 corridor, so easy motorway links was a really essential part to our investment strategy. So making sure that people can get to the M4 or to Cardiff in a quick time. So the time frame that they were looking at was in roughly about 25 minutes away from Cardiff. So that made it also a really important part of our investment criteria, making sure that we've got areas that are multifaceted as well, with lots of strong employers within the area. That's one thing that you want to look at. You don't want just one big employer being the main source of the jobs in the area, because that literally wipe out the whole of that economy, you know, the micro economy that's there. So you don't want to do that, and I come from an area where that exact same thing happened and it never recovered. So if you want to look at how you see how many employers, all those kind of things, you want to look at that. So that was important criteria. We knew the area, we knew the prices, we knew that instantly we were getting a deal. This was all on the market, by the way. Now, people say at the moment you don't find any deals on the market, but you do if you know the real potential of them. And it's really about spotting those diamonds in the rough. You need to understand exactly what you're buying before you buy it, and that's what we did. So with this one, I phoned up the agent as soon as I seen it, because I knew that a property in this area doesn't usually go for this kind of price. It's a massive property, and I didn't really understand the scope at the time to how big these properties were. I just knew that in that area, for the price, it was a pretty good deal. So it went for 120 on the market. So what I was able to do, I never even seen the property, in fairness, at the time we purchased. So I actually got a family member to come down, have a look at the property because I was away, and they went and viewed the property on my behalf. So luckily they bought a builder who was one of their clients, because their accountant, they showed him around the property, and they were looking for any kind of issues, and the builder went through and he's seen and give him a rough idea of how much it would cost to repair. So to me, all of these things were absolutely amazing. They were hitting the right things. So they said that the renovation would be about £5,000, which is great for something that looked a lot worse than what we were expecting. There was a structural issue in the property as well. So I knew that at that point we could knock it down a bit. Now, it's not the massive discount that you would think from knocking it down there, because already at this point I knew that it was at least 30 grand below market value at that point. So I knew that even then what we needed to do was only go slightly less, because there was definitely competition within the area, and since the pandemic's happened, competition has been so rife. You've had like 15-20 people looking at the same property. Any property that had any problems at the time was just going out to the market faster than anything. So things that weren't even deals were just going out. And I knew that with this one, people who actively invest in the area were going to see it, so we needed to act quickly. As soon as they came from there and had the viewing, I got the breakdown of the numbers. I was there, ready to offer, cash offer straight there. And that's what got us the deal. They got the offer accepted straight away. And I remember the day because it was my partner's birthday. So I was able to get that, and we secured our very first buy-to-let property at that point. Little did I know there was going to be more issues along the way, but it was a real surprise when I got in to see the property, which I'm going to show you now. As you see, strikingly, the green is taken from the outside, is all the way through the property, so it's an interesting one. Already green everywhere. So I like the fact that with this, you've got the hallway, separates the living space. It's quite nice to have a hallway, and it adds something to the property. You're not just walking straight in, separates the room, separates the feel, bit of feng shui. So one of the things with this room is you're taken back by how grand it is instantly. The high ceilings, the space that you have. You wouldn't particularly expect something like this in a mid-terrace property, but it's relatively large as well. It's a nice family home, and definitely something that you would see in probably the size of some of the semi-detached houses I've seen. So it's really a lot of bang for your buck in terms of what you get for the property. So one of the things, you've got the chandelier features as well. This is one of the key features that I love, is the old fireplace, the craftsmanship around it, even keeping with the green theme. This deal almost didn't even happen though. So nothing kills deals faster than a bad solicitor, which is my saying, and it actually came from this very property. What happened was that we had our solicitor, who was shocking, by the way. I mean, absolutely shocking. We were working with them to try and get this property over the line, and I think the seller took pity on us, even though they were threatening to pull out of the deal. This was taking absolutely forever, and if we were ever to go through this again, we knew that we would never use this solicitor again. The only problem was we had two going through at the same time with them. Terrible, terrible decision. But we've got a good solicitor now, and I mean, that makes a hell of a difference when going through this property game. You need good people around you, you need your team, and we've got a core team now, and it makes a hell of a difference. The thing about this property was definitely the scale. So for what we were paying for the property, comparable to the area, this was massive. I mean, there was an open plan living room, the kitchen was a really good size, the bathroom was okay, but it had a small lean-to extension there, and the garden, although not the best, we did have a garage, so that kind of made up for it. But overall, the property was originally a 4-bed, and I mean a decent sized 4-bed. But I'm looking at properties now, even ones that we've bought, are much smaller than this. So when I look at the scope of this property comparable to other things in the area, I mean, this is a really good property, especially for the price, and we got a steal for that reason. But a lot of property, a good location, all perfect things that you want to look for in your investment criteria. Here's where the issue is, okay? So basically what's happened is the timber lintels above the window have rotted through. So that's caused this issue, and obviously you caused the damp and everything like that. So you can see the additional damp issue that's come through here. But it's not the end of the world. Most people might think it is. It's not as bad as you might think. So basically, timber lintels has rotted through. What we're going to have to do is replace that with a concrete lintel. First of all, we're going to strip this away, see how bad the damage really is. We might need to take out part of the ceiling, but if we do, it's still factored into the refurb budget. Put the concrete timber lintel in. That should fix any of the problems. It will be a bigger problem if it was downstairs. So if it was downstairs and it was load bearing with the timber lintel, then you can have an issue. So as you can see in the video, when I walked in, little did I know how bad this problem would actually be. Now, you wouldn't really think that this would be much of an issue. It's just a bit of problem over the window, but no, that wasn't it. That wasn't it at all. The whole thing was an issue. So I mean, the whole width of the property, the whole width. What do you think about that? That not just was it supporting over the window, it was supporting the whole property. And I thought at the time that this wasn't going to be that much of an issue. But turns out it was one of the worst dry rot cases the team had ever seen. So as you can see, the lintel is running through the room over there, all the way through to here and right the way across. And I mean, this is like styrofoam. You know, I could put my finger through it and it goes straight through. It's pretty bad. Not something you want to hear on any project. Is one of the worst things that they've ever seen, let alone that you're going to be paying for it. As an investor, that's not music to your ears. That's the absolute opposite that you want to hear. So what did I do? At the time, I was thinking, obviously, first thing you think of is numbers. Like, I'm going to be paying out through the nose through this. But luckily, at the time, we had a building company, so we were able to mitigate a lot of the costs. But if you are an investor, I would also suggest a 1.5x the renovation costs, even 2x, just to know that you've got the money there to spend. And I mean, like, the smaller renovations. If you're a big developer and you double your cost, that's not really realistic. But I'm just saying, as a small developer and renovating, just think about it. Just have double the money or 1.5x the money just aside, just so you know that if any contingencies do happen, then you're safe. At least 10% though, because those things are usually things that can happen. If you've got the extra budget, then you could think about if those extra fixtures, fittings, and all those kind of things are going to add to the property. If you got that in the budget, then at least you could spend that on that and upscale the standard of the property to hit that target end value. So there are benefits in doing it in the long term anyway. So another key insight that I had was that you could rent out the property before it's even being completed. Strange concept, but even I've seen this with like off-plan developments and all that. You can sell the property before it's been finished. Well, you could do that with rental as well. So what we did was we just put a sign in the window before it even been completed, just with like to let and a number. That's it. I mean, there's no fancy like marketing plan or anything like this. This was just literally piece of paper and a permanent marker, to let, and the phone number. And the phone was ringing off the hook. I mean, so many people were ringing about this property just because of that. When you think about that, you hear about getting it to a letting agent, they're going to do a full marketing plan, it's going to be amazing, you're going to spend out through the nose for it. None of that. Just number in the window. Like, that's the stuff that can work if you've got the right demand. And that was a mind-blowing realization to myself. It was a short thinking, just to put something in the window, and that's what worked. And we were able to get somebody in, get the property agreed to get let before we'd even finished at that point. So massive thing to learn is that just put a sign in the window before you've even finished the property. And when it comes down to that, you didn't have to pay the fees or anything like that. The plan is to check out what it's like. Now, we had to consider whether we were going to give this property to an agent or not. And because it was one of our first properties, what we decided was we were going to actually manage it ourselves, just to get the understanding of what the process would be. And that was a crucial thing. It taught us a lot in terms of what you need to be doing and what you need to be doing in terms of getting up to standard and all of the paperwork and all that kind of stuff. So it was an interesting process to put yourself through, not just because, oh, I'm going to set it and forget it. It's because you want to know the mechanics of what a letting agent is doing. So how do you know how well somebody's performing unless you've done it before? You don't have access to that kind of information without being hands-on and understanding what they're doing for their money. And the perfect way of doing that is to trial it and do it yourself. With this one though, you might be thinking, why didn't we do it to the really high standards that we would usually do our properties to? And this one really baffled us as well. So what we decided to do is decorate and sort out that structural issue. But we knew that the real demand was so strong with the rental here. Now, for us, that meant that we didn't have to go and do the new kitchen, the new bathroom, new everything that we, usually would do. We're not spending like 25 grand on a refurb. We were spending 5. Makes a hell of a difference. But the funny thing is, and this is the thing that really baffled me, I could charge exactly the same rental as the properties that if I'd done it up, which was in my estimation of what we would get as a target rental value. Absolutely baffling. Really it is when you think about it. So if I had gone and spent all that money, would I really be making the extra return? If I'm already charging the same kind of rental that we were expecting, and then I went and spent all that money, look how long it would have taken me to get the return. So like just for perspective, okay, we spent £5,000 in renovation costs. Well, it was a bit more then because of the lintel, but that was an extra for us. And I know that obviously because we got the construction company, that didn't look exactly like that figure would be if it was another investor. But we didn't spend much else other than that. It was mostly decoration. But if I had gone and spent on a kitchen, let's say the kitchen, that's another 2,500 just for the kitchen alone. That's for the materials. Let's say the bathroom, that's going to cost an extra grand. So when you start throwing these extra couple grand here, couple grand there to do all of these things, why on earth would you do that when if you're going to achieve the same kind of rental? Now this is the thing that was a realization to myself at the time. I was like, why would you go and spend all that extra money when you don't need to? And that is the thing. You're always thinking, oh, you've been taught and like to go in and fully do the highest level that you can possibly do in terms of your rental. And even at that standard, we didn't even have to do that. So when you put that into perspective, that makes a real shift in terms of what you do for your rental. Do you really need to go over the top for the rental if the demand in the area is strong? And that's why knowing the demand in the area is more important than anything when it comes to renovating your property. Understand what people want, and if you don't, just provide them with what they want and what they need, not over the top. Now, what you're really here for is what would it look like 6 months later in this property? Now, I would tell you that 6 months later, we've had no problems. Okay, we've had some problems, but there was only one, and that was a lean-to leak, which got sorted straight away. Now, when you think about that, in a 6 month period, and you're paying, what was it, 70 quid to sort this problem, to get some sealant, it's not that much, right? And it's one of those things that you factor into your rental. So not only are you factoring in the lettings, if you're renting out for that, but you also factored in a 10% contingency for maintenance. And that was obviously covered in that regard for 70 quid. So I'm happy with that. The other thing is that I'm so happy about is that the property is actually getting looked after. And I mean, not only looked after, they're adding value to the property. So they've come in, they've rented the property out, they've really seen it as their home, and they've even put new flooring downstairs. So they've carpeted throughout downstairs because they have a young family and they were slipping on the laminate. So they carpeted downstairs, and there's even talks of them renovating the kitchen. So I've got tenants who are actually adding value to our property. Think about that. So they're coming in, adding value to our property, not depreciating it, adding value. Now that's what you want. Making sure that you've got really good tenants in the property. It changes the experience for you all the way through. And I would tell you wholeheartedly, the thing that makes a difference is to look someone in the eyes. If you can look someone in the eyes and see who you're actually renting these properties out to, it makes all the difference. You build the relationship, you understand the connection, you understand what they're trying to achieve, if they're going to stay there long term, and they plan on having more kids, all those kind of things. You understand their story, and that is the thing. I want to look people in the eyes and understand who I'm renting out to ultimately, because that makes me feel confident in the decision when I'm renting the property out. I know it's not for everybody if you're a distance investor and all that kind of stuff, but at least get someone you know to do it, and someone you really trust, not just any letting agent or anything like that. Make sure it's someone you trust. Make sure that they're looking in the eyes, they vet them, and make sure they understand not just the stuff that's on paper, but the real stuff, the emotional intelligence stuff, to understand the person that is going to be renting this property. Because at the end of the day, this is an asset that you're buying, an asset that needs to be looked after, and it needs to be something that's not going to just depreciate. You're supposed to make money in property, and the only way to do that is if you've got people looking after the property. Otherwise, this is going to cost you a lot more. And I know other investors who have been really bad tenants, and it's ruined the property, and it's wiped out over a year's worth of rental. So you want to think about that. Make sure you get the right people, and you can make sure that you're getting the return that you need. And that's what we've got so far, and I'm going to touch wood that that's still going to happen in the future.
We are again the all-important part, the numbers. But before we do, hit the like button for the YouTube algorithm, and subscribe and hit the notification bell if you want to see more videos like this. So I'll take you through the first part, which is obviously the purchase price. We purchased a property at £115,000. Now, I mentioned that this was a good deal for the area, and we knew that the levels in the area were going up. So the growth in the area is really good, close to the M4 corridor, which allows easy access to Cardiff and to London through the M4. So for that's why we base our criteria on, and making sure that we get properties in a multifaceted area that has good transportation links, and there's lots of reasons as to why people would live in the area. That's the most important thing for long term, not just short term money. The next thing is the cost. So it costs 7,161. That's with all the fees and everything like that, along with the renovation works. Renovations are about £5,800, and then break it down to solicitors and all this other kind of stuff. So real world costs £7,161. So you might be wondering about the cost, thinking, oh, well, they're pretty low. But what we didn't pay is stamp duty or land transaction tax, as we have it in Wales again. So when you're buying your first property, this is one of the things that you can avoid. So you're not able to, it's a relief that is available to you. I'll say it again. All right, I'll keep it. You just do go again. So you might be looking at the number saying that's a bit low. Well, the reason for that is because we actually avoided stamp duty or land transaction tax, as it is in Wales, because it was our first buy-to-let property. So as an exemption, that was our first property that we bought in general at that point. So making sure that you didn't have to pay that on it was one of the key factors in deciding whether to go with the property or not, because if the stamp duty was something that we didn't have to pay, then that was obviously a key bonus there and helping us increase the return on an investment. The money out after refinance then being £108,750 at a loan to value of 75%. So this is a typical mortgage you're going to take on a buy to let after buy refurbish refinance strategy. The money left in the deal then being £13,411.25. Now, as a stark contrast to the other deals that we've done, it makes a lot of difference when you're leaving a lot more money in. But realistically, you can be leaving this kind of money, if not more, even up to £20,000 in the deal, and it would still be a really good return on investment. So although we try and strive for living as little money in as possible, it's all about the strategy. Realistically, you might not be doing many deals if you're trying to get absolutely all your money out. In a hot market, it's very competitive. It's really hard to get deals like that. If we were going through a recession, then into recovery, then we might be able to, if you picked up at the bottom, then pick those up and get a lot of stuff that's going to leave very, very little money in. But realistically, in a hot market with this kind of competition, it's not really realistic to be pulling all of your money out of the deal. If not, you're just going to be waiting on the sideline. And money in is important. Money in the market. If you're not making the money and it's just sat in the bank and you're on 0.1%, you're not making money at that point. So you need to think and consider, what is the difference between if I'm going to sit on the sideline, not do anything with the money, as opposed to having my money in the market. Even if you're in a bit less return, then it's still better to be in the market because you're earning something as opposed to barely anything. Then the return on capital employed for this is 27.35%. Now, that is still a very good number. Now, compare that to your typical investment. If you think about if you were putting it into, typical stocks, if you put it into even the bank, like the bank is the main place that people have their money and don't invest it whatsoever. 27.35% and in a stable asset class at that. So this is the kind of asset class that has seen exponential growth over a long period of time and has been going up. And that's not to say that's the future of everything. Is things can change and the markets can dip, but overall people are going to need a place to live, and that's more important than anything. So making sure that you've got something that is stable and you're not going to lose all your money. I know that crypto is a really big thing now, but if I'm going to choose 27.35% over the massive returns, but I haven't got as much money invested. If I had smaller money invested, then yeah, crypto is a really good opportunity. But if you've got something large amounts, safety and security from the investment, that's what we were after. So if you look at it now, there's a rental of £675 per month. So when we're looking at the yield, we've got a from purchase price yield of 7.04%. Then if we've got a refinance yield, it would be 5.59%. Then if we were looking at net before refinance, we would have £578, and then net after refinance, we're taking home £305.63 in our pocket. So when we look at that, that is what you're typically going to get then after your net. So after that, what the net means is minusing all of your costs and everything like that, including the mortgage after we refinance, and we're going to take home £305.63. So that's a pretty good estimation of how much we should be making. Obviously, you've got to factor in things like maintenance and other things like that. So if we do the numbers really quickly, it's £3,667.56. That's how much you're adding every year. So that's essentially giving yourself a pay rise, as some people say, is you every time you're adding one of these properties. Now, if you think about it and you're thinking about your buy, refurbish, refinance strategy or portfolio building strategy, let's think about it this way. Okay, so we're going to add more properties to this. Say we bought 5, we'd be taking home £18,337.80. Now, that's more than a lot of people earn in a yearly salary. Now, think about that. If you were going to add that kind of level of properties and we're taking a majority of the money out, you don't need that much money really to invest when you're thinking about it like that. But if you're thinking about it just recycling your money, then you could be financially free just by doing this strategy. For this is going to take 3 years and 7 months for the money left in this particular property to get back out. So on other videos, we talk about infinite returns. At the point where you get all your money back out, you get an infinite return on your money because all of that money invested is no longer in the deal and you're just making money on your investments and while pulling the initial capital back out. And we look at the profit if sold. Now, another strategy we could have employed is if we flipped the property. And to be honest, if we'd flipped the property at this rate, we would have made £22,589. Well, if I was going to do this strategy, I would have looked at it a bit differently. I would have put more of the higher end stuff that we mentioned before. I would have done the kitchen to a higher standard. I would have done the bathroom to a higher standard. I would have done the decorating to a higher standard and what probably would have plastered walls. But then obviously the costs would have gone through the roof. So when you're thinking about that, you need to also think about the ceiling prices of the street. So when I think about those things, would it be worth it to do a flip? Yes, it could have been. But for the strategy that we wanted to employ, we wanted a really strong capital growth area. And for that reason, we held on to this property. So being as our first buy-to-let property, this is the one that I'm quite proud of as being our first. It's not a bad deal to do as your first property. And I would say that if you're looking something like this would be an ideal investment for any property investor or aspiring investor, even as they're more experienced. So if you like this video, please give us a like, hit the subscribe button, smash the notification bell, and I'll see you on the next video.